All right, guys, welcome back to the channel. Bitcoin's just 1.5% away from a new all-time high. That's $1,700. Today, we saw 4.2% pump breaking through the $106,500 resistance level. So very close to a new all-time high. This isn't the market that I'm discussing today as a hidden runaway bull market. There are several more that are presenting themselves in the space that looks like they could be pumping for many more years to come. That is not Bitcoin or altcoins, and they've also done better than altcoins. So we need to take a broad look at the traditional markets today, Bitcoin, of course, the crypto data like USDT dominance, others chart, and the total market caps before we get into some altcoins. So don't go anywhere. Hit the like button if you enjoy the content and you find value from it. Subscribe to the channel if you're new here. Let's dive straight into the analysis that I've gone through for you today. So as I said in the intro, very close to a new all-time high. Some of the things to be concerned with, let's start with that before we get into the hopium and the bullishness of it, is the lack of interest at the moment. The volume is still very, very low. You can see in the last 24 hours, pretty reasonable day up from 105 to 110,000 USD. The nice thing here is that it broke through the 106,500 and this swing top that happened on the 3rd of June. It is only 1 day up so far, breaking past that level, 1 day on the breakout. Yes, it's been up in terms of green days for 4 at this point in time, but I would like to see more consolidation above this level. Overall, things are looking okay if it's able to consolidate above this level. If it's not, things are still looking okay based on what we covered in yesterday's video, that the support is down around the mid 90,000s. So that's the 50% level at 93. And then the support line here at about 95,000. So even if this broke down, consolidation between 93 and 112, if, say, it happens over the coming weeks, I still see that as relatively positive, relatively bullish for the longer term for Bitcoin. On the flip side, breakdowns, so the invalidation here, breakdowns of 93, that's going to be relatively weak now. And the longer we stay up here and consolidate, should it break down, then that looks even weaker. If we just continued down from this point with little rallies and then broke through that level, it wouldn't be as bad. But because we've tried again at the moment to break into new fresh highs, and at the moment this is the second highest daily close in Bitcoin's history, if it was to break down from here past the $93,000 level, then to me that's a lot weaker because we've tested the top again. Whereas if it was just a normal healthy correction, you can see how those things are slightly different. You know, more people trying to push up didn't happen, so therefore, it'd be a weaker breakdown. But for now, we're still up around here. Things are looking okay, provided it remains in this price range. For the weekly chart for BTC, things are still on track here. It's had the rejection at the 8-year rejection line that we've covered for a while. You can see the 2017 top, the 2021 top, the next 2021 top, and then the 24 and 25 top. If Bitcoin is to test this overhead resistance on weakening volume, that could lead to something like last cycle. Now, if the upside remains on track, here are a few of the price targets to look out for. Of course, the first being 112,000, the previous all-time high. So barring that, I'm looking forward to the 50% levels on the breakout above the diagonal here. So the next 50% level on the extension is 119, which also lines up with another level here at 119. So this particular extension is the monthly swing. So there it is right there. We've broken past the 50%. Next level I'm looking is around the 75%, being again 119. And then each of these price extensions, once we reach into price discovery, are coming out at around 135 to 138. So if I zoom right in here, you can see 134.4, 136.500, and 138. So basically a nice little round average there of about 136,000. They're the next targets I'll be watching out for if Bitcoin can break through this 8-year resistance line, and if it can break through the next level around that 119 to 120, which of course is also another psychological level. Now, if this happens, that's the price targets, time targets. You can see that we are on a very fast move to the upside. this has been one of the fastest moves that we have seen in the entire bull market. Remember, this bull market is 2.5 years old. We are 133 weeks into the bull market. Previous bull markets have lasted about 3 years, 150 weeks. So we're less than 20 weeks out from an end point, which is almost in the time frame that we could expect a top, and it could happen earlier than people think. So no one knows for sure. I as hell don't know exactly when this is going to end. No one knows. I know I get the comments, people write it on X and YouTube. When is this over? When is alt season? When is this? No one knows. That's the point of the market. You just have to be putting the probabilities in your favor to assess what you want to do next, looking at the risk and reward. What's the risk here? Knowing, well, as best as you can, that previous cycles have only lasted around 150 weeks. This cycle is currently 133 weeks. Could this cycle go beyond 150 weeks? Yes, it could, but previous cycles have all suggested it's going to be around that time frame. So that's the first thing. What do you do there? The next thing is the price targets. I'm looking at these price targets. This is the sort of analysis that has worked time and time again, just looking at where the next resistance levels could be. Sure, it could go higher, but based on what we have, if it gets to those levels around those time frames, it's probably telling you that there isn't that much to go. And even if there is it worth the risk? That's what a lot of people forget about. Is it worth the risk? You know, it might get up here to 120. Maybe you sell your entire bag at those resistance levels coming up to this time frame, as I'll get to in just a sec, but it keeps going and maybe it goes to 130 or 140. Who knows? Maybe 160. Is it worth the risk knowing what you already see here? 2.5 years in, 600% up from the lows. Is it worth every last ounce to try and squeeze that last bit of 50% out of the market over the coming weeks? That's what I want to talk about just a bit later in the video with another runaway bull market, something that's potentially starting. It's breaking out of a 13-year pattern. They're the sort of things that you want to look at and identify for the next asset to trade. And that's the sort of stuff we do day in, day out with TIA Premium, putting together a plan so that you know what to do next. Link to this is in the video description. If you want to do short-term trading or long-term investing, the analysis and the course content is there to help you out and get you to that next stage of your trading investing if you want to take this thing seriously. And I say serious because it does take time, it does take effort, and you have to put the work in to get the results that you want to get. Well done to Ricardo. Ridiculous results here, that's for sure. So that's looking at the short term and the long term for BTC. The last thing I'll mention here is the time frame and the speed angle that we've been following on the channel. That's this one right here. So that was the speed of the move from the August low to the January top. And we also were tracking the December top as well. So the idea with these is the market moving at a relatively similar pace, slower pace, or faster pace? Because that'll then allow us to see what the market participants are doing, the buyers and the sellers. Is there more interest in the market right now? And should it fall underneath that speed angle, then that could tell you that there is interest lacking and the interest is running out in these moves. So we're getting into this sharp, pointy end where things are just running up faster than what we've previously seen. So this also lines up with the Elliott wave that we've been following. Generally, you would see that on the wave 3, but that we haven't got any confirmation that we are in wave 3 just yet. So although I'm talking about this thing just shooting up to the moon, it doesn't have to be that that occur today, because for now we haven't got the breakout yet. So this could reverse next week and just track around here. And for those that are following chart patterns, you can see maybe it turns into something like pennant up here, where you start to see a grind with tightening trading ranges, lower highs, higher lows, getting ready for that breakout. So that's still a bullish sign as well. Exchange volume has also dropped off as well. In any of these cases, it hasn't put in new lows yet. So that's still a positive for the bull market here. But yeah, basically I haven't got that interest yet to push things higher. We did liquidate a lot of shorts for the crypto markets. So we're at 400 million for the day, nearly $500 million, with the shorts being 370 and the longs only at 64. You can see this on the chart down here. So that's an above average day of liquidations. So that's a good sign there for the market. You can see here in the long shorts, that's now flipped. We had a huge differential to the short side. That has typically brought up another turning point in the market, and we got that to flip to the long side now. Okay, over to the US stock markets and how this is all playing out for the rest of the cycle. You can see that we've got a very similar trend here for post-election years, bottoming early April and then rallying. The blue line is 2025, the black line is post-election years, and all this is saying here is that in the data of the last 75 years, you can see there's been a dip into April. There's also been a dip into March, and the next major dip I'm looking at is in June. So you can see that's basically part of the cycle analysis that we've been following. Now from that low in June, most of the cycles suggest that we'd run up into the later part of July, maybe early August, before another decline for August and a more significant decline coming into October. This one, however, suggests late September, but I'm looking at this into October based on our 20-year and our 5-year cycle. So when I first started out, that would sound like up, down, and sideways. And I guess you could argue that it is. But looking at it from a cyclical point of view, to me, that essentially is saying this period for the Northern Hemispheres, your summer and your fall, is not going to be the easiest period to just buy and hold and hope that we get a massive bull market at that point. That looks like it comes later in Q4, a low and then a run up. You think it's all back on, and then it gives back all of those gains. And then once everyone's rinsed, then we can start to move on in Q4. That's what it looks like is happening for the S&P 500. You can see we've had this grind up. This red line is the 5-year that we've been following. So you got a bit of a run up here into June, July pullbacks. So late June, July is steady there. A little run up here into August, and that then brings on another pullback for October. Then things start to get a little bit more clearer towards the end of the year. Speaking of end of year, the market is suggesting that there's going to be some interest rate cuts. However, the closer we get to those dates, those interest rate cuts don't seem like they are going to stick around. Now, that's all in the face of a falling US dollar. So interest rate cuts that then get turned back into a pause, maybe even a hike like we looked at yesterday, because of what's going on with the bonds and the yields and those sort of things, just having a pretty rough time with business certainty basically getting eroded with Trump's on again, off again tariffs. So the US dollar at the moment is stalling here at around 98 to 100. Overall, it still looks like it's going to fall. And the problem that I see is if the US dollar is falling while interest rates are paused, that's going to be an even bigger problem for the US. Generally, when the interest rates are heading up, you would expect at least expect the US dollar to start to rise again, because you've got a reason for people to want US dollars. You're going to get a return in them. You're going to get a higher interest rate. But at the moment, we're just seeing interest rates climbing higher. So you've got your 10-year and your 30-year yields. You have your bonds overall falling, and the US dollar is also falling. We've had another 3-month period down, followed by a month and a half of sideways grind here. So that's all part of that end of the cycle, things looking like they're about to continue down for the US dollar, which makes it a little bit easier for risk on assets as well. We've seen obviously Bitcoin rise, and silver. Silver just started to break out of a 13-year, well, not necessarily consolidation, but there's a new 13-year high. It fell from the 2011 all-time high there in April of around $50 an ounce, all the way down to the low here in December 2015. Then a flush out for COVID in 2020. They came all the way down to about $11, $12 an ounce, and essentially had this huge period between 12, 13, and about $19 an ounce before it broke out, came back, retested those highs at around 18, and then we've been grinding higher ever since. This was an area that I pointed out, I think it was October 2022, to members in Discord through some of the exclusive posts here, of a point where I was buying silver based on the chart. So based pure, like pretty steady chart example there. The consolidation, the breakout, the retest, I decided to buy here, and now I've been climbing higher. So it's nearly up about 100% on that move. Some would say it's not enough. I think that's not a bad return. A lot of other results that you see from hedge funds can't get that sort of return over that period. But nonetheless, that's a bit of an easier climb here. And what I think is happening next is we're going to see a breakout of these commodities again. Things like silver, gold needs some time to consolidate. And yeah, we've got even oil breaking back past $65 a barrel here as well. In terms of the commodities index, we've just had another attempt higher above the 50% level. So we're within a 4-year range here. And if this also breaks out of about 600 on this reading here, $600, that could also be another sign that we're going to see much, much higher prices for some of the major commodities, in particular your metals, and this one here is made up of oil as well. Now, if that's the case, and we start to go down a bit more of a rabbit hole here with further out projections, that could then lead to even further inflation, mostly for things like oil that gets used, copper that gets used, silver and gold not as much. Now, if you're getting sick of the chaotic nature of altcoin seasons, trying to make it on some sort of gamble, and you'd rather take this more seriously to a long-term venture, looking at commodities, real estate, and the stock markets like I do here on the channel, TIA Premium would be the place to go. We don't just follow the altcoin markets. We look at everything as I cover here on the channel, and then how to put this into a plan so that you can use this long-term for your trading and investing. Link to that is in the video description. We're going to check out USDT dominance, which in the last 24 hours has had a relatively good day for the bulls. So if you're interested in Bitcoin and alts, mostly for BTC, of course, as that's up at around 110,000, and we got the rejection at the 50% level here. So at 5%, nice rejection back on Thursday of last week, a few days down from that high, and now we've had a breakdown of the major 50% level at 4.75% and a daily close underneath the all-time support line, what I'm calling the all-time support line, basically because it has held up the market every single time. You got Bitcoin all-time high, Bitcoin top, another Bitcoin top, Bitcoin all-time high. There was a Bitcoin all-time high here in March 2024. Then we had the most recent Bitcoin all-time highs, and then most recently another one here just a couple of weeks ago. So we're at that level once again. We have not broken down from it yet. The next important level are these lows right here. So you can see at around 4.4%. We start to get a breakdown from that. We can get another test at 3.7%, and that's going to lead to a lot more money flowing back into Bitcoin and altcoins. Now, the difficulty here is finding which ones are going to be stronger than the others. Speaking of others, chances of altcoin seasons probably happen somewhere above 8.8%. And then you're going to need to find those stronger altcoins which have the chance of moving while there is more liquidity going out into Bitcoin and altcoins. And that can all happen between these two levels here, 3.7% and where we currently sit around 4.5%. You know, it's happened before, happened around these tops. There was still money flowing left, right, and center, but it was just a lot less for many of those altcoins. Like we can see with the altcoin chart here, chance of altcoin season, I've got a line drawn in the sand here at around 8.88%. Nice infinity number there. And that's because we could see the previous altcoin pump from June 23 to March 24, or you could call it this high here in December 23. Basically, the Q4 2023 pump happened from roughly around this line here at around 8.8%. You could call it 8%, but again, you could see it happen from around this level, 8.8. So I've got that in the sand again, 8.8. We had a few weeks up recently in November 24, and then it all came crashing down back underneath those levels. And for now, the market is still underneath that low of 7.8 and all of the rejection at 8.8 as well. So it's not impossible for this to come back. It's just higher risk of trying to get into something and it just fail again at each of these levels that it has been rejected from before and then come crashing down. So it's not impossible. I'm not trying to say there's no alt season. There are obviously always chances, and the chances increase, and I want increased chances when a market is able to break out of a bear market. Total 3 is on the way up at this stage. So this is all of your altcoins excluding Bitcoin and ETH, obviously Bitcoin not being an altcoin, and the chance of an alt season lies somewhere around $950 billion. And of course, the 50% level there is at 909 billion. So it tested it like we saw in May and then came crashing back down. And then the only other time we saw was a nice big run up late in 2024, that October, November, like we just saw on the others there. Little pump up. And then the other time was basically Q4 of 2023. So you had 1, 2, and then a little failed rally just just last month in April, 2 months ago. So are we able to do it again? That's the line in the sand, around 950 billion. If it is the case, then I'm watching for altcoins that are above at least their 50% levels. In the case of Ethereum, we're looking at some closes above $2,900. For SUI, some closes above $3.60, ideally above $4. And then XRP is currently trading at $2.30. Some closing prices around $2.50 to $2.70. So that's around the halfway point of the downtrend. Now, many don't want to leave that much on the table, but note that if you're trying to buy it up every time here, it's been rejected at around that 250 level once, twice, 3 times, 4 times. Maybe it's able to go through this time. It's always a maybe until it happens, and then you can look back and go, oh, damn, I should have done it. But if you did it here and here and here and here, well, then you're basically left holding bags of losses. So it's really dependent on what you want to do. Do you want to wait and pay the premium for more of a confirmation that there is going to be at least a bit more of a sustained rally than what has previously happened over the last 3 months? Or do you want to risk it again and try to bite the biscuit here and 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 maybe here, only to be at an average price of basically where you started anyway, maybe at 240 or 250. That's the game that you need to understand when you're playing in the altcoin space. Hype is another one of those altcoins that is above its 50% level. It's had a relatively strong run here, so I'd be putting my stops relatively close just in case these were all false moves back up to $40 and they started to come back down, and I wouldn't be losing too much. And Solana, $161, just trading around the 50% level at 150. So again, this has not been able to recover $195, and on the altcoin versus Bitcoin pair, it looks even weaker. Still not above the 18,000 Satoshi, really 180,000 Satoshi level right here. SUI, on the other hand, well, also underneath the 50% level at 3,200 Satoshis, and XRP flirting with danger at 2,000 Satoshis. So BTC's on the move. Commodities like silver are also on the move. Altcoins, some of those are lagging there. And I wasn't even able to get to our crypto fear and greed index, which has also recovered and replayed very similar to last time with about a 15-day move to the downside. More on this one in future videos. Like and subscribe. I'll see you back here. Stay safe in the markets, and I'll catch you at the next video. Till then, take care and peace out.